And welcome to Business Incorporated live on Channels Television. Here's what's coming up in the next 55 minutes. Central Bank of Kenya announces release of new banknotes. And investments in Zimbabwe's power sector hit 3,000 megawatts as cost-reflective tariff shifts brings in more investors. And Central Bank of Egypt approves new InstaPay feature that allows foreign currency receipts. It's great to have you join us. I'm Ladi Williams. The markets are buzzing right now, but let's get a check on what's playing out with metals. See gold prices have risen for a third consecutive session. It's now to a one-week high, driven by a softer dollar and escalating Russia-Ukraine tensions. And it's back on at this point for gold, $2,640 a pound, up 0.32%. We see U.S. gold futures up over 0.5%, $2,643 a pound. So we're seeing action there. The U.S. dollar rally has paused after hitting a one-year high last week, making the bullion more appealing to buyers holding other currencies. Let's see what's playing out with other metals at this time. We see the likes of silver unchanged, $31.22 per ounce. Platinum, that's up 0.1% following the yellow metal. Then we have palladium, that's unchanged, still above $1,000 for the trade today. Let's get a check on oil now. Oil prices have held steady for a second day today as concerns about escalating hostilities in the Ukraine war potentially disrupting oil supply from Russia and signs of growing Chinese crude imports. That offset data showing U.S. crude stocks were rising, and we see Brent $73.26, down 0.5%. WTI, that's the U.S. grade, trying to get back above that $70 psychological level, but we see the spread between both closing up, but it's unchanged. That's for WTI. To other stories now, we see the average price of a 12.5 kilogram LPG gas, is also known as cooking gas, has increased by 58% in 1 year. That's in the country, and that's according to latest report released by the National Bureau of Statistics. In its latest cooking gas price watch report for October, the NBS says average retail price for refilling a 12.5 kilogram cylinder of liquefied petroleum gas increased 2.58% on a month-on-month basis to 16,734 naira 55 kobo last month, up from 16,313 naira 43 kobo in September. At the same time, the average price of 5 kilogram cooking gas rose by 3.32% month-on-month to 6,915 naira 69 kobo in October from 6,699 naira 63 kobo recorded in September. While on a year-on-year basis, the price rose significantly, 51.58% to 6,915 naira 69 kobo in October this year, up from 4,562 naira 51 kobo in October 2023. And we see the Federal Competition and Consumer Protection Commission is raising alarm about substandard and unregistered sugar products in Nigerian markets, particularly smuggled brands from Brazil, including Grupo Moreno, Terrace USIS, Joa, Alvian, and Arapora Bioenergia are the products which fail to meet mandatory vitamin A fortification requirements, pose serious health risks to consumers. They undermine the integrity of the local sugar industry and contribute to price manipulation that harms the market. Acting on a tip-off, FCCPC operatives conducted discrete investigations across the country, particularly in the southwest and northeast regions. The investigation revealed that many of the identified sugar products lacked normal labeling, including production and expiry dates, batch numbers, and the mandatory National Agency for Food and Drug Administration, that's NAFDAC registration. Even more concerning, most of the products were not fortified with vitamin A, a critical nutrient essential for good vision, immune health, and overall well-being. The absence of this fortification exposes Nigerian consumers to serious health risks, including blindness and increased susceptibility to infections, particularly among vulnerable groups such as children and pregnant women. To other matters now. Nollywood has reached a historic achievement, surpassing 3.5 billion naira in year-to-date box office earnings in Nigeria. According to data from Nigerian box office, over 935,000 tickets have been sold, reflecting a 125% increase in revenue and a 46% rise in ticket sales compared to last year. The surge in box office success has been attributed to improved production quality and captivating storytelling in Nollywood films. And the Ogun State government has assured members of the Manufacturers Association of Nigeria and other investors operating in the state of favorable policies and programs to improve ease of doing business index in the states. The pledge was made by Governor Dakwa Abiodun in Abeokuta, the state's capital, during the 39th edition of the annual general meeting of the association, where it was represented by the State Commissioner for Industry, Trade and Investment, Debola Shofala. The president of MAN, Francis Meshioye, asked the state government to review some of the challenges in the manufacturing sector, particularly the current monetary policy and exchange rate, as well as high cost of electricity. Take a listen.
There is no doubt that the manufacturing sector operates in an inclement environment. Manufacturing performance continues to be constrained by high cost of diesel and other petroleum products, paucity and high cost of forex, unimpressive level of patronage of made in Nigeria products, insecurity across the country, high cost of raw materials, high regulatory compliance costs, and even recently, unjustified hike in electricity tariff.
We know that we are facing a lot of challenges, and even as a state, and my governor, being also a private sector person, is an industrialist, a very successful on that matter. And that is why the policies and programs and various initiatives of the government are targeted towards creating an enabling environment for businesses to be able to thrive. The government is very intentional. We are not only taking advantage of our strategic location or natural competitiveness or being close to Lagos. Because the different thing that we'll see ourselves as taking advantage of the spirit from Lagos, but in terms of government policies and programs, from day one when the administration was inaugurated in 2019, a lot has gone into play in terms of government business transformation, putting institutions and vehicles in place to ensure that we continuously create an environment where only new businesses will only thrive, but even those businesses that are existing can also upscale and increase their capacity and investment.
All right, so it's rate setting season again, and the Central Bank of Nigeria, the monetary policy meeting kicks off next week, Monday. And the question now, will it be a hike, a hold? Don't think I should be mentioning a cut at this time. But let's find out more now on how it's going to impact markets and the economy. Let's talk to Patrick Jumedia, a head research, Sterling Asset Management and Trustees Limited, joining me right here in the studio. It's great to have you.
Same here too.
Yeah,
good to
so
see you.
The season is upon us again. It's not about Christmas, even though we know Christmas is. We don't know how the consumers are going to navigate. Another Christmas. It's quite interesting. We're almost getting used to these higher prices at this point. So it's another meeting. What are you seeing? It's the same issues before this MPC. Weak currency, higher inflation from the prices. PMS prices, gas prices, every price. I don't know if you can mention one price that's not gone up. I'm still looking for that one thing.
The price has not gone up.
I don't know. I've not found it yet. But what are you expecting next?
Obviously, I don't think there is any. Yeah, because of course prices have changed, and because these prices have a way of interrelated with each other. So if there's an increase in one of the prices, it will obviously lead to an increase in every other prices like that. So, well, having said that, yes, we do not expect if we happen to see a rate cut by next week.
Wow, I'll be shocked.
That's not likely to happen. But what we're likely to see, a lot of people have come up to say, oh, the CBN is going to continue, the rate hike. And most people have said 20 by 0.25% again and some very few people are saying by 0.5%. Well, in my opinion, yes, I will not be surprised if I see that they increase it, but I'm thinking that having raised it by about 850 basis points between February till date, and if you look at what has happened in the treasury bill markets, the price NTB rate has gone up last time from about 19 to about 23 or 24. That's large. I've not seen that.
When I saw the FGN 2031 bond, that hit a new high.
You see,
that was on Monday.
Exactly.
Yeah.
So that value, those increments, is making me try to rethink, to say, oh, maybe government, because the essence of increasing those rates is to say that, okay, let's control our exchange rate, because they've come to identify that exchange rate is the key determinant of the inflation that Nigeria is facing. So let's stabilize the exchange rate. So if they are doing that, they are discouraging people from, their huge demand, particularly as we are in the fourth quarter of the year, where those demand for FX will be high. So if those rates has gone up, and if you look at the exchange rate from the last time government had the last time MPC meeting and now, compared to the previous time, it hasn't depreciated so much, because I'm sure they are going to be looking at the numbers, what has happened from the last time we had the meeting and now, what has happened. It hasn't depreciated so much. And again, if you also look at money supply too, the growth rate of money supply too. Yes, it has gone up, but by how much? And I'm very sure that those statistics will help them give some, inferences about what kind of decision that they will take. But again, they will also be considering the fact that we're entering December, and demand is likely going to go up. And if that goes up, and we don't have supply to increase, to back it up, prices are likely to go up again. So, having said all of this, in my opinion, I think it's likely to be a hold.
Likely to be a hold.
It's likely to be a hold.
We'll definitely watch out for that. At this point, considering we're still seeing weakness, in the FX market at this point.
Because even though the naira has depreciated, but by how much? It's from the last time they had the meeting till 19th, I think it has depreciated by about 0.9%. If you look at from the previous meeting that they had, it depreciated by about 7.7%. So the question now is, what are they going to do? Because, of course, I know it has to be based on the numbers that they are seeing. It's not going to be subjective. So having said that, I feel that it's going to be a hold. And again, considering that the NCB rate has gone up and the bond rate too has also gone up. Right. So, and those can help to further stabilize the exchange rate. Don't also forget that government is doing a lot of things at the moment to also stabilize the exchange rate and all that. So if we put all of these efforts of the government together and we try to look at it vis-a-vis what is likely to happen to demand in December. Of course, I see these policies or these factors having superior effect on the demand that's going to happen in December. And as such, I feel that there's going to be a hold. Even though most people are saying that it's likely
maybe
to
25 basis points.
25 basis points
right.
or 50 basis points.
Because we're also seeing the likes of economies that have seen a deceleration, when it comes to inflation, and they're nearing most of their targets now. The Bank of England, they get to its target, get below that, but the latest result shows that
it's
gone above that. So it almost seems most of the countries that have been cutting, at some point they may have to pivot at this point. So how do you see that playing into a country like Nigeria, where we've been raising and trying to find stability somehow, and we're expecting maybe a hold in the next meeting? What are you seeing in 2025? For most of the African economies, when it comes to interest rates?
Yeah. In the Western world and in some emerging economies, you see they've been able to achieve their target, like you mentioned. Unfortunately, in Africa, we are still seriously struggling. And one of the reasons is because of, one, the type of goods that we produce, which is majorly primary, and the fact that we rely heavily on imported goods. Are these going to change next year? So if they don't change, then if whatever happened to this Western world, if inflation rebound again in those countries, we're likely to have the impact, because we are going to be importing either inputs or goods from those countries that we consume or we either use for additional production process. So if there's a rebound of inflation in those countries, then it will be difficult for us to say that we are going to be cutting rates in many African countries. So again, of course, because of the interrelationship between countries of the world, whatever happens to them is going to play a serious impact on not just Nigeria and every other African countries.
Right. And I was having a conversation with my colleague earlier. My colleague asked me, okay, since most African countries are struggling, with US dollar inflows at this point and currency weakness. Is it time to say, you know what, let's back the Naira with gold? And I said, we've seen this before. We've seen how the ZIG, has performed so far in Zimbabwe. It's not really encouraging.
Yeah, so I've had that conversation several times too. And for me, and that's why for someone like me, when I look at the African Continental Free Trade Agreement, I felt that would have been an opportunity for Africa as a nation to come out, to be able to increase whatever they produce, and then begin to have a voice in the global space. But unfortunately, if you look at the rate of trade between African countries since they've started the commencement of the African Continental Free Trade Agreement, I don't think it's been too significant. And so the only way to have a voice is to produce. It's not just by coincidence that they call these countries industrialized nations, because they are industrialized, they produce. And that's why we need to change our orientation in terms of what are we producing and our consumption pattern. Those are the ways that we can then begin to say, okay, truly, we can raise.
So even if we back the currency with gold at this time, and we're still not producing,
that's
no
the
difference.
Issue. And we change our consumption pattern as well.
Okay, so I guess it's a combination, of many things at this point. All right, going into next week, are we expecting volatility, with the markets?
Yeah, the market has been volatile, and somehow some sectors appear to be doing well despite the hike that we've been seeing, And of course, like I've said in several discussions, is to say that the oil sector has been doing very well. Firms in that sector have been doing well.
Yeah, I saw the oil counter was up about 133%. That's the oil and gas index.
Yes, yes, fantastic. And I'm sure the reason is not surprising, because these people have the ability to shift the cost to the end users. And they make profits. As the price is going up, they are doing Thanksgiving. They are going to.
I remember at some point, last was it 2022? We're talking about windfall tax. For businesses enjoying
those kind of
most of those rising prices.
Maybe they did that for the banking. They did that for the banking, and if you saw what happened in the banking index too, at first it was negative beginning of the year, and suddenly because of the increased hike, they started benefiting from it. But the question is for how long? Because if the rates continue to go up, what will happen is that investors will be having increased defaults in some of the payment of this loan, and that will begin to affect them again. But for now, they are still celebrating. Some of the bank, in terms of their index, has been showing some fantastic results there.
And we know most of the tier 1 banks are still in that capital raising process with the rights issue, and about 2 banks are currently having a rights issue program right now. But, looking forward at this point, what are you seeing that will be that catalyst? Or do you think the NGX, fine, year to date about over 30%, increase for the all share index year to date. Are you seeing that continuing into 2025? That's for the
NGX. Yeah, this is December once again, and of course the end of the year effect will always have impact on the market. And again, like I've also said in some of my interviews, it also depends on people's ability to take risk, and look at the return that they will get from their risk, and the sentiment of investors basically, and what they see, how they can interpret what is happening in the economy. So those will have a serious role to play. Well, even if the NGS will go up at this time, it may not go up too significantly because the year is already coming to an end. But maybe something around the 30 between, if we put a band on it, maybe between 30, 35 year to date to end the year, and that would be fine.
Maybe about 35%. All right, we've been seeing some, a couple of company results, third quarter, 9 months, results so far. I'm looking between the tea leaves there. What are they telling you, when it comes to operating in a high interest rate environment? How do you think most of these companies are navigating, raising funds?
Well, I'm not saying it's going to be easy for many of them, but somehow they've been able to do that. if you look at the banking sector, and that's why they are doing well. If they put up their right issues, people want to patronize them, because at some point people felt that, oh, the banking sector, are they likely to survive the recapitalization process and all that, and that led to people leaving that sector. But again, when people saw that, oh, I think with this recapitalization, the banking sector is going to come out strong, and it's important to buy their stock at a relatively cheap price now, because as they are selling, because of recapitalization, the price is now relatively cheaper. So if you don't buy now, by next year, the price of this share might go up. So let me quickly go and rush to buy. And then that led to some increased performance.
So I guess it's FOMO at this point.
So these issues, I don't think it's easy for some of them to raise the capital, but somehow they've been able to do it, except those in the consumer goods sector, those in the industrial goods sector, those ones might be struggling. And some of them somehow, because of if you check what happened to MTN recently when they brought out their commercial papers, people still had an oversubscription, so to say. People still wanted to buy. So somehow there's still trust, there's still this confidence of investors in some of these companies, and they are still raising capital.
We'll keep watching. Yeah, 2025 is not far off.
Is it?
At this point, it's partially upon us. But thank you so much, Dr. Patrick Jumede, as the head research, Sterling Asset Management and Trustees Limited. Thank you for coming.
Thank you so much. Good to see you.
All right, we'll take a break now. When we come back, we head straight to the markets. That's in a moment. Just stay with us. All right, let's head straight to the markets now. We have Anita Edit with the details of what's playing out in the local bourse and major global markets that we track. Great to have you.
Yes, good afternoon, Ladi, and of course, a happy midweek if we have that sort of a greeting.
Yeah, happy midweek.
Yes. Of course, the happiness is also with the NGX. Let me take you back to about some 20 years ago when we had that. We're still talking about the market, the bank recap, where we had that IPO market. There's been a dearth of IPO market. But so far, the banks are still revving the markets. And
right.
Then at the same time, month to date is up 0.23%. No, about 0.3%. And then, as I yesterday,
I do miss the euphoria of IPOs.
I really do miss that time of the IPOs.
Maybe 2025. We'll see.
2025. Well, the macroeconomic environment is still what should determine. Don't forget that we've had so many exoduses of multinationals and then delistings. MRS is still on its way to being delisted.
Right.
So, but let's talk about the intraday market numbers for our viewers. Let's see on the screen there. Yes, Nigeria stock market back from the Friday, which the market was gaining. The market has still been able to sustain that positive momentum into the midweek trading session at intraday, where we see 0.21%. That was the last track that we had for the market. And of course, it has climbed into the 98,000 points, 98,179.91 points, index points for that market. And then so far for the year to date, the market is at 31.02%. And after gaining 0.23% yesterday, and in value terms, it was up by more than 100 and quite a number there in several billions. But that doesn't matter. What matters is the percentage. For the Johannesburg Stock Exchange, 0.88% at intraday, and of course, back into the 85,000 level and still climbing. For the other two markets on the African continent, EGX 30 and the NSE All Share Index were in the red. For the close of Tuesday's trading session, almost the same margin, 0.53% and 0.58% for these two markets, both in the red. For that, for the wrap for Nairobi Stock Exchange, but at intraday for EGX 30 in the red. And now let's talk more about the fixed income markets, where we see today the central bank is conducting a primary market auction. That's the third auction within the third quarter. And of course, they're targeting about 610.8 billion naira worth of maturities across the 91-day, the 182-day, and the 364-day maturities. So we'll be bringing our market analyst, Nabila Mohammed, a financial market analyst with Chapel Hill Denham, to give us details about what to expect and then other metrics within this market. Thank you for joining us, Nabila.
Thank you for having me. Good afternoon.
Okay. So now my first question is, how is the FX market rates, inflation, as well as in interest rate environment in Nigeria, how has it affected the demand for treasury bills today?
So we have seen, because of the high inflationary environment, we've seen interest rates tick higher, especially starting from the policy rate in terms of the NPR that we're looking at it since the start of the year. And we have seen that the treasury bills rates have also responded in that same line. Now, what do I mean? For context, we have seen effective yields, especially on the one-year T-bill, rise from as low as 9% at the start of the year, sometime in January, to as high as 29% when we're looking at effective yield on these one-year instruments. We've also seen that trend also in the OMO market, that's in terms of OMO yield. In fact, just speaking to the last auction in loan, we did see that effective yield on the one-year instrument for the OMO bills, just like the one-year T-bills, also inched higher to around 60%, very close to the inflation rate that we've seen. So that is what we are really saying, regardless of the high inflationary environment, we have seen that interest, even the high yields that investors can actually enjoy in the fixed income market, we are seeing that investors buy into that high yield environment in order to benefit from what we are currently seeing across the fixed income space.
Quite interesting. Okay, so now how the results of today's auction, how will it influence the direction of interest rates and liquidity in Nigeria's financial system?
So to start with, for today's auction, we're expecting some level of oversubscription, just like we saw in the last auction. I mean, what is going to be rolled over in terms of maturing bills across the three standard maturities is around 600 billion, and that would be matched with some level of oversubscription. We still expect that rate will hover around the 23% level, especially for the one-year instrument as we saw in the last auction. Now, post the auction results, which will come out later today, we would expect that investors will play more actively in the short end, especially the one-year T-bills, because that was what we saw in the last auction. And if history is a guide, we are likely to see that also happen after this auction results are announced later today. So we'll see some more participation in the fixed income market, especially at the short end. And mind you, what is really driving investors to participate in that segment of the market will be because of the yield or the interest rate that they are actually going to enjoy from these instruments. I mean, we're talking above 20%, we're talking 24, 25, which we are not seeing even in the long-dated instrument for the bonds that is hovering around 17 levels. So all this will definitely support some level of activity at the short end of the curve through the rest of the week. But we should also be mindful of the fact that liquidity is another driving factor that could potentially for invest in activities in the market. And this month alone, we have around a total of 367 billion in terms of coupon payments. And yes, we definitely see some level of intermittent fast inflows that will enhance system liquidity. But all this may not be long-lived, so we will likely see the rally that may happen post-auction today to be short-lived through the rest of the week.
Okay. So finally, what are the expected implications of today's auction result on the overall yield curve in the Nigerian market, in the fixed income markets?
So as I earlier said, the overall yield curve is likely to tip down, especially at the short end of the curve, given the interest that investors may keep because of the high interest rate in that space, especially in the OMO segment. But we do not expect this to continue for a long time, given that liquidity is also an issue that investors would like to consider in terms of trying to purchase instruments in fixed income markets. So if there is liquidity, yes, we will see some level of activity across the yield curve. But right now, sentiments are skewed towards the short-dated instruments, that's treasury bills, OMO bills, largely as a result of the high yield and that investors can get from these particular instruments.
Quite interesting. Thank you so much, Nabila Mohammed, financial markets analyst with Chapel Hill, Denham.
Thank you so much for having me.
Okay, let's look at the Middle East market this time. And of course, we see mixed sentiments. Yesterday, we saw these two markets indexes, both on the United Arab Emirates. They were both in the green at intraday, but today it's a mixed picture. For the Dubai is in the green, while Abu Dhabi is in the red. And for the other two markets within the Middle East region, Tadawul for Saudi Arabia in the red, while Qatari Stock Exchange in the green. So it's kind of a mixed picture there. We see the impact of some earnings results being released. So we see cherry picking, we see bargain hunting, and we also see profit taking. So that is taking its toll on the markets, on the United Arab Emirates and within the Middle East across that region. So that's it for the markets on that region. And from there, let's fly over to the United States, where we see positive sentiments coming for the world's biggest economy on Wall Street. Dow Jones Industrial Average, NASDAQ, and the S&P 500 all in the green. That's the stock futures ahead of the opening bell for today. We saw the market is actually expecting NVIDIA to report its results, its quarterly results, at the closing bell today. So the markets are really gearing up for that. And of course, investors will also listen to comments from the Federal Reserve's Governor Lisa Cook and Michelle Bowman, as well as Boston Federal Reserve President Susan Collins. So they'll be giving their own reports on the U.S. economy. At the same time, we see the markets coming, that come under pressure following reports that Ukraine had hit Russian border, or one of the Russian borders with U.S.-made missile. So for that, for yesterday, the markets in U.S., they closed kind of mixed. But for details of that, let's bring in our Washington correspondent, Maria Bird.
The U.S. stock market had a mixed day on Tuesday as investors shrugged off fears of escalation between Russia and Ukraine. This is clear that the U.S. stock market is showing some gains in some areas, but still struggling with the Dow Jones as it closed down at 0.28%, while the S&P 500 struggled back to 0.4% up. And the heavy tech NASDAQ was the winner of the day, having fought back after declines to being up over 1%, closing on 1.04%. This was mostly due to NVIDIA showing great signs of growth. Many investors are watching to see what will happen next and to ensure that the U.S. stock market can continue to grow and potentially see a winning day for all three indexes before the end of the week.
Our Washington correspondent, Maria Bird, giving us details of Wall Street closing numbers for Tuesday's session. And finally, which is always the last stop, is the Asian markets. Was mostly positive sentiments for most of the markets within the region, except for the Nikkei, Japan's benchmark stock market index. We also have the topics, but the benchmark is the Nikkei 225, which was down for the close of Wednesday's trading session, 0.16%, 38,352.34. And this is coming after reports, trade data for October reports showing that the exports growth came in at about 3.1% year on year. And that top estimates by economists was polled by Reuters. And then that's also up from 1.7% in September. At the same time, import growth also beat estimate at 0.4%, but was down 2.1% from the prior month, which was the month of August. Now, we're still talking about the markets across the region. They're also looking at what happened in the U.S. It was a mixed close, like Maria Bird mentioned there. So for the Kospi, it was green for the close of Wednesday. Hang Seng Index also the same for the Shanghai, as well as the India's Nifty 50. But all eyes are now centered on what happens within the United States, as well as some other geopolitical factors which might have to either dent the market. And let's not forget that President Trump, which has been announcing that there will be some changes, tariffs, that is putting some fears across major markets around the world. So, Ladi, that's it for the markets at intraday. I don't know what you think about the Trump trade and, of course, the fears of Trump's second return. What is he going to do? How's the market going to be affected in terms of interest rate, in terms of inflation, and other trade-related issues?
I guess we'll be looking out for the next catalyst at this point that's going to spur this market. But for now, I guess the Trump trade is cooling down. Thank you so much, Native, for giving us the details there from most of these markets. Well, let's take it on to the UK now. We have Juliana join us from our London studio. Great to have you, Juliana. So we see data out this morning showing that UK inflation that surged above the Bank of England's 2% target. And I remember we were celebrating this, a couple of days. How's it looking?
Good afternoon, Laddie. 2.3% is the data, the inflation data, CPI. It came in this morning from the Office for National Statistics. And I know I've got to cushion how I explain this because, of course, if you compare that 2.3% to what most of our viewers are facing in Nigeria, it is totally incomparable. But we are talking about the cold British Isles now, and it's the cold weather that has driven up inflation during the month of October, because it's that jump in energy bills that we witnessed last month when the price cap was increased to just under £1,700. That is what has pushed up CPI, and it's quite worrying. If you think about it, a 1.7 to a 2.3%, that's more than half a percentage point. I think it's going to be pretty uncomfortable for Prime Minister Sir Keir Starmer. He's journeying on his way back to the UK from Rio, because the cost of living, as you can expect, is a major issue in the UK. We were talking yesterday about farmers protesting outside of the House of Parliament. We've just had, in fact, it's still ongoing, Deputy Prime Minister's questions, lots of Tory MPs absolutely furious with the Labour government for what they describe as lying to constituents, telling them that prices and taxes wouldn't go up. But that's exactly what's happened, and it hasn't even been long. The Labour Party is still in their honeymoon period. So it is quite worrying. You know, the cost of living crisis is still an issue. And again, I've got to emphasise the cold weather in Britain. It was snowing yesterday, laddie. It's going to be snowing over the weekend. It's almost impossible to sleep in the UK at the moment without your heating on. But the problem is lots of people just cannot afford to heat their homes at the moment. And that's a real crisis. Again, I know we're talking about first world problems here, but every single year, people do die because of the cold weather. And we know that there were changes to the winter fuel allowance. Now they have to be means tested. Predictions that perhaps 5,000 pensioners could die this year. So I do urge anybody who has parents or loved ones in the UK, make sure you tell them to wrap up warm, because it is cold. But, you know, CPI still really high. We know that 2% is that benchmark for the Bank of England. But considering the broader macroeconomic environment, issues with the budget, potential tariffs, I heard you and Agnete just talking there about the Trump train, the Trump tariff trade train is also affecting us here in the UK. So, yeah, difficult reading for the PM, particularly as we are heading into Christmas, where people do want to spend and enjoy with their loved ones.
Right. Julian, I do trust you're going to stay warm right there. You know, some people take good weather, you know, for granted. But I know yesterday, Andrew Bailey, you know, had a chat with most of the MPs yesterday. How did that go?
Well, you know, it happened, you know, the eve of the CPI data. I suppose that was quite good for him. But you're absolutely right. You called it yesterday morning. Andrew Bailey, the Bank of England governor, at the exact time I was talking to you, was speaking with a cross-selection of MPs at the Treasury Select Committee. And they discussed, of course, a broad range of issues. The main issue being what is happening with interest rates. Are we going to see further cuts? And as to be expected, the governor, Andrew Bailey, was very cautious about any further cuts. Perhaps, you know, they had, well, I'm presuming they did have a forensic look prior to this release from the Office for National Statistics this morning, showing that CPI had picked up. And he says that inflation is going to remain elevated in this country for at least the next year, which isn't going to be music to the ears for consumers, but also those in the country who are carrying the burden of elevated interest rates. There was a cut last month, so it went down from 5.25% to 4.75%. And I think there had been hopes that perhaps at the next meeting of the Monetary Policy Committee on the 19th of December that there would be a further cut. That is very unlikely. So we have to wait and see, shall we say, what happens later. Also, as well, lots of discussions about this open letter that was written by retailers yesterday that was shared with the Chancellor, Rachel Reeves. And retailers were basically saying, look, you know, in your budget, you have raised how much national insurance that employers have to pay to retain staff. That's gone up a staggering amount, and retailers are suggesting that it is going to lead to a lot of job cuts, that businesses just simply cannot afford not only to keep staff but to pay them at an elevated rate. So that national insurance contribution isn't going to go to staff's back pocket, and that's going to the government. It's going into their coffers because, of course, they say there was a £22 billion black hole. Now, Andrew Bailey, when questioned yesterday at the Treasury Select Committee, he too agreed that it is going to lead to job cuts. And in fact, the government's own Office for Budget Responsibility suggests that 50,000 jobs will go within the next year in the UK because of the announcements in the budget. That is pretty significant, and it will affect all industries, all sectors. So there was lots of talk on that. And also, again, going back to your favourite topic, Trump, and the potential of 20% tax on exports going out of the UK into the US, pretty significant. So there are loads of issues at play. I said the honeymoon period is still on. Clearly, the honeymoon period is completely over for the Labour government. We just want the UK economy to be stable again.
And how's the pound and stocks reacting to this inflation reading?
Not great. The pound, but the all share is up. It's up 0.22% at intraday, laddie. The FTSE 100, the blue chip, up to 0.21%. But quite interestingly, the domestic market, the FTSE 250, that's down, trading down 0.12%, as you said. We have a closer look at how the pound is doing at intraday. It's trading down against the US dollar. It had a little rally that's come to an end, down by 0.17%, although the pound is trading up against the euro by 0.26% and up against the Japanese yen by 0.46% at intraday.
All right, Juliana, thank you so much. It was great getting all that information out of the UK. All right, let's get a check on what's playing out in Europe now. Data shows that no business sector has seen as much of an uptick in recent years as the defense sector, for obvious reasons, as two major wars are playing out in Ukraine and the Middle East. For many businesses, the question is how to position themselves in this environment. And we see the CEO of Pan-European Airbus. It says some consolidation might be helpful. Lars Holter is with DW, and he tells us more now. So, Lars, what exactly are you hearing from Airbus?
Thanks for having me, Ladi. Yes, indeed, the group's CEO, Guillaume Faury, says that Europe's space industry, he initially started with that, but later expanded his comments to defense, needs to restructure and consolidate in the face of private US competition and investments in China and elsewhere. To quote Monsieur Faury, he says, we are fragmented in a world where some giants have emerged, especially in the US, but not only. They are also growing in China. And that is certainly correct. China has grown its aerospace sector tremendously over the past couple of years. As for the US, SpaceX has become a giant in the field, supplying NASA with rockets and technology and pretty much single-handedly saving the country's space program. Now, SpaceX is obviously owned and run by Elon Musk, who is now President-elect Trump's best buddy. And with that, his standing and most certainly the standing of his company will grow. So as not to be left in the dust, the Airbus CEO says that his company and France's Thales Alenia Space and Italy's Leonardo are in early talks on a possible tie-up of their individual satellite activities.
And how are others in the business world reacting? After all, consolidation is usually not popular.
That's correct, but here we are seeing some consent. Take Mikael Johansson, the CEO of Swedish defense firm Saab, who also said that European nations needed to collaborate more on defense and buy more from European suppliers. He actually says that Europe was facing a make-or-break moment on defense, which sounds a bit dramatic, I guess, because the European defense sector is also booking record revenues and profits right now. After all, war is their business, and we have Russia's war in Ukraine coming towards the end of its third year, with Germany and other European allies supporting Ukraine with weapons. And we also, of course, have the war in the Middle East. And then we have the most recent developments in the United States, where a new administration will certainly ask for NATO partners to invest more in defense. That's a song we've heard before from Donald Trump. He always wanted partners to pay up, and they did. Germany has upped its defense defense spending, and others did too. Now, not necessarily to please Trump, of course, but rather in reaction to a changing geopolitical environment and a heightened threat level.
All right, what are investors looking at in today's market?
Markets had a pretty rough day yesterday, so no more of that calm trading we had just seen. It was after the escalation in Ukraine, so we see that even at a time when investors would have enough data to digest to keep them busy, there's always a good chance that geopolitical events disrupt everything. As for those numbers, today we're getting a quarterly update from chips giant NVIDIA, the biggest and most important company in that sector, so that will definitely be on everyone's radar. Some more inflation data is coming out too, and some ECB talks, but we've talked a lot about that recently and how much direction can markets really get from daily updates here. So I don't see that as much of a mover today.
Lars Holter, thank you so much for giving us the details out of Europe. And to other stories now, let's start with East Africa. The Central Bank of Kenya has announced that it has released currencies with new features into circulation. The CBK revealed that it had extended the new feature to all other denominations to complement the August rollout of the 1,000 Kenyan shilling denomination. The new currencies containing 4 new features were extended to the 50 Kenyan shilling, 100 Kenyan shilling, and the 200 Kenyan shilling, as well as the 500 Kenyan shilling notes. Among the new features, the notes include the signature of the Governor of the Central Bank of Kenya, Kamau Tuge, and the year of print, which is 2024. The new notes also include new security threads with color-changing effects specific to each denomination. And the Central Bank of Egypt has approved a new feature allowing users in Egypt to receive international money transfers through the InstaPay app. According to the Egyptian banks are now authorized to process transfers via InstaPay from any country. That's the Central Bank of Egypt. Transfer fees will be determined by banks based on the currency and country of origin, while recipients will receive the funds in Egyptian pounds. The service will be introduced in phases, starting with transfers from Gulf countries within the next 2 months. The Central Bank of Egypt's officials also noted that discussions with Gulf central banks are ongoing to facilitate the rollout. And Energy and Power Development Minister in Zimbabwe has called for upgrading of Zimbabwe's grid network, citing the country's susceptibility to power failure and losing about 18% of energy. According to the Zimbabwe Electricity Supply Authority chairperson, says that power supply deficits and slow progress towards universal electricity access is impacting the sector. To address these issues, the government plans to expand electricity access through various sources, including solar power and grid expansion. All right, let's get a check on what's playing out in the crypto market. Now we see Bitcoin, we did report it hit a new high, 94,000. So we're seeing new highs, but let's see the color on the screen. Today we see it's mostly green, a mixture of red also, if you look at that screen. But so far, we're still seeing new highs for Bitcoin. Bitcoin still hovering around that $94,000 range, and it did lose that 94 level, $93,515, 1.96% up. But some other cryptocurrencies that we track on CoinMarketCap, BNB having a pullback, 0.52%. Solana, a big drop, 2.85%. But XRP still managing to stay above the $1 range, not acting like a stable coin. Staying around that 50 cents for the longest time. Let's look at the top headlines now. We see Coinbase set to delist wrapped Bitcoin. That's according to Coinbase Global Inc. They've announced plans to remove the wrapped Bitcoin, that's a WBTC USD, from its trading platform, citing listing standards with trading suspension that's scheduled for December 19. But they're working on their own wrapped Bitcoin. That's the C wrapped Bitcoin. Then Solana's daily revenue, that hit an all-time high recently, according to data from the proof of stake network. They're saying that the meme coins, allowing Solana's daily revenue hit a new high. That euphoria of meme coins, and it's also been tagged the Ethereum killer, that's Solana. So we're seeing that accumulation helping the revenue hit a new high. That was today. All right, let's get a check on what's playing out with most of these markets now. We have Olumide Additional, financial market analyst. Hello, Olumide.
Hello, Ladi. Good afternoon. Thanks for having me.
Good afternoon, Olumide. So we're still seeing Bitcoin, trying to get new highs. 94,000 was reached. What are you seeing playing out in the market?
I think Bitcoin has humbled a large chunk of market analysts. I particularly didn't see Bitcoin rising this fast this month, but it's just less than 6% away from the $100,000 mark. And just like you recall, it hit the all-time high on Tuesday as market uncertainty remains high with the Ukraine-Russia nuclear play coming to play. So I think investors are really betting still strongly on Bitcoin. But if you look at the crypto market, despite the fact that the market is 3.1 trillion in market value, that's about the GDP of California, you see that Bitcoin dominance is still extremely strong. And recently, liquidation in the market was really triggered by XRP, that 20% down from its 3-year high. It was at 1.26 last week. And also, since Solana $20 away from its all-time high, station at around 255, is presently trading at 235. So, Ladi, it tells you that the market is really holding on to Bitcoin, but we're seeing the altcoin market melting. Another interesting angle is that we've seen large liquidity going into meme coins. You're coming to Nigeria, we've seen a lot of youngsters downloading the Phantom wallets, taking advantage of the phone meme minting machine and using the text screener to pick in assets of their choice. So while meme coins don't really have utility, they are known for exponential gains, and that has really allowed many young Nigerians. So different folks, different strokes, but Bitcoin still remains the traditional favorite asset for institutional investors in the crypto, and that's why, unsurprisingly, we've seen Bitcoin doubled this year in value.
Right, and what risk are you seeing ahead at this point? We've seen the Bank of England inflation numbers now above the inflation target, but not by too much. Is there a risk most of these advanced countries might not hit their targets for inflation, and this might?
Yeah, but Ladi, I think market has priced naturally. The market has priced in the Bank of England's reaction, anticipated reaction, and also the body language of the US Fed. I think where the market is currently looking at is who Donald Trump makes his Secretary of Treasury. Recall that position gives a direction of the dollar, and if Donald Trump really will make Bitcoin a strategic reserve. So there's this argument that it means it looks like the status quo might be in play. Okay. The person Elon Musk was voting for was thrown to the Commerce Secretary. So the market is really waiting for who becomes the
so much to anticipate with this new government. Thank you so much, Olumide Additional, financial market analyst. Thank you.
Thanks for having me, Ladi.
All righty, that's the show today, and that's how most of the markets we track are looking. Definitely will give you more updates tomorrow. Thank you for watching. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.